Hello Maverick Traders, this is Imri and welcome to today's currency recap. It is Thursday, June 12th. January 12th. I'm already dreaming of summer. It's cold here in Canada. Okay, so lots going on in the market today. Let's talk about it. So the market is betting big on inflation cooling, the Fed reaching a terminal level in their rates quite soon, and then pivoting. The dollar is under pressure as a result, and the yen is extremely strong. I'm not going to bury the lead. If you were long the yen today and short the dollar, you would have done very well. All right, and crypto outperformed greatly today as well. Okay, so first off, we have this long-standing trend line in the S&P 500. It remains to be seen whether or not we can actually take it out. Either way, the December highs remain very important. I think these moves in equities are getting very overdone. I'm personally looking for this rally to fizzle out soon. And even if this is the start of a larger bullish move, conditions are starting to get quite overbought here. However, in the total world stock index, we have this inverse head and shoulders pattern, which is looking very interesting indeed. If you want more information or details on how to trade the head and shoulders pattern, please check out my video on how to do just that. All right, so if we take out this neckline and close convincingly above it, then that is a very positive sign for this ETF indeed. Okay, so I'm going to leave it at that for now, and if that in fact does come to pass, I'll be sure to update you. And over in crypto, defying expectations. Now that we've broken well above these moving averages, we've crossed to the upside. It surprises me. It remains to be seen, however, whether we can go back and take out those November highs around 21,500. That is the next upside objective for bulls. However, I'm still a little skeptical on this crypto run. But if you are looking to play the long side, I would most definitely wait for pullbacks now. We've had several days of just intense buying. I don't feel good about chasing moves in this kind of market condition. All right, so we're just waiting for these moving averages to slope higher. If they do, this market will get a +3 rating. Now, in terms of news, there isn't too much going on tomorrow. We've got GDP numbers coming out of the UK, and then in the morning, we have consumer sentiment numbers coming out as well. I don't expect either of these to be massive market moving events unless there are just, huge surprises on either of those numbers. Now, in terms of currency analysis, first off, in crypto land, we have Bitcoin Cash outperforming pretty much all of the other major cryptos we're tracking, but all the cryptos we're tracking had a reasonably good day. Over on the fiat side, the yen was the clear winner, the dollar was the clear loser, and I also put the Swiss franc and the Canadian dollar and New Zealand dollar as losers there too. Other than the yen, there wasn't another currency that really stood head and shoulders above everything else, which is very interesting. We'll have to see what the Bank of Japan has to say in their next statement to see if the yen can keep up this outperformance. On the velocity side of things, on the fiat side, we've got the yen at a +3, the euro's at a +3, but I think that's a little deceitful. I think we can look for reasons to buy the euro against the Swissy, for example, and potentially against the dollar, but I'd rather stick to the yen for now in terms of looking for a currency with positive velocity behind it. On the negative velocity side of things, well, we've got quite a few things to pick from. I like the US dollar, the Canadian dollar, the pound, and the Swiss franc the most, however. Now, I'll show you why as we take a look at some possible trades. All right, so the pound, we still have a little bit lower to go. I really want to see us test those November 4th lows if possible. So if we take a look at some of the lower time frames, this to me looks like we're going to continue breaking down, right? So I am looking for further weakness in the pound until we test that November 4th low right here. The Swiss franc is playing out according to plan. Last week I called out this resistance zone and that we're looking for a move lower in the Swissy. We did get it. I don't think it's done yet. The relative strength index still has quite a ways to go before reaching oversold conditions, so I'd still look for reasons to short the Swissy. And the dollar, well, I mean, I think we will take out this August low here, August 11th low. If we do that, then it puts the lows from May's in focus. I think that's a fairly easy trade, honestly, and perhaps particularly against the yen. The yen really looks like it wants to reach its May 12th highs. So looking for reasons to short dollar yen on bear rallies, low bases. I love that trade all day long. Okay, so in conclusion, please pay attention to proper position sizing, especially as volatility has picked up again, and make sure to follow your plans, your trading plans. So in an environment like this, it's very dangerous to chase the moves, all right? Like dollar yen, the move for today is over. You know, it's possible we drop another 2% tomorrow, but you know, I personally would never chase a move like that in this kind of market condition where follow through has yet to be proven very strongly, right? I really would want to wait personally, if I'm following my plan, for some kind of bounce or base before rejoining that trend. I'm not really one to trade much for mean reversion, but if you do have mean reversion strategies in your trading plan, it might not be a bad idea to look for those in this current market environment. And all right, folks, that is it from me. I look forward to seeing you guys again next week.